The USD-JPY pair is rebounding above the 146.00 level after it dipped to a 2-week low of 145.86. What's driving this move? In this video, we will discuss the latest economic data from Japan and the implications for the Bank of Japan's monetary policy, as well as the near-term outlook for the USD-JPY. Let's start with Japan's preliminary PMI data. For July, the Japanese yen initially strengthened after the release of the data, as it showed that the country's private sector growth remained steady in July. The composite PMI printed at 51.5, which was in line with market expectations and slightly higher than June's 51.3. A reading above 50 indicates moderate expansion in the sector. A closer look at the data shows that the service sector continued to show strong growth, coming in at 53.5 in July compared to 51.7 in June. The manufacturing sector, however, contracted in July with a reading of 48.8, which was worse than June's 50.1. The contraction in the manufacturing sector was mainly due to a decrease in new orders, which may be a negative sign for the Japanese economy. Despite the mixed PMI readings, the market still sees a chance of a rate hike by the Bank of Japan this year. According to the latest market expectations, there is an 80% chance that the BOJ will raise rates by 25 basis points to 0.75% by December. However, the odds of a rate hike in the next 2 years are only around 50. This is because the BOJ is expected to continue to take a cautious approach to rate normalization given the uncertain global economic outlook and the fragile state of the Japanese economy. For the USD-JPY, the short-term outlook remains positive as long as the pair holds above the 146.00 level. The pair has been supported by the outlook for the US dollar, as well as the slow pace of tightening by the BOJ. If the BOJ continues to lag behind other central banks in terms of rate hikes, the USD-JPY pair could continue to rise, with resistance around the 147.00 level in the near term. However, it is worth noting that the market is still pricing in a significant amount of rate hikes by the Federal Reserve, with the terminal rate expected to reach around 5.6% by March 2024. This suggests that the USD-JPY pair could face some headwinds in the longer term if the Fed starts to cut rates while the BOJ remains on hold. In conclusion, the USD-JPY pair is rebounding above 146.0 as the market digests Japan's latest PMI data and the implications for monetary policy. While the data showed a slight improvement in the services sector, the contraction in the manufacturing sector raises concerns about the Japanese economy. The market is still pricing in a chance of a rate hike by the BOJ this year, but over the next 2 years, the tightening cycle is expected to be gradual. As long as the pair holds above 146.0, the short-term outlook remains positive, with resistance around 147.00. However, in the longer term, the pair could face headwinds if the Fed starts to cut rates, while the BOJ remains on hold. That's all for today. Thank you for watching, and see you in the next video.